Well, welcome everyone to Steve Savant's Money, the name of the game. I'm Steve Savant, syndicated financial columnist. On today's show, what the insurance companies are looking for in your application. Part 2 of our series on insurance protection and defensive planning with property casualty specialist Beth Glowacz. Beth, we're talking about, again, property casualty, and today I want to talk about, what are they looking for? I heard you say in the first segment, you said they're looking at your credit, they're looking at your driver's license. Like, whoa.
Right.
A lot of privacy invasion there, right? They're checking you out.
Yeah.
Now, I was surprised because I kind of understand why you're going to the DMV, the Department of Motor Vehicles, for auto insurance. I kind of get that. Hey, how many DUIs have you had?
Right.
How many speeding tickets? I kind of get that. I'm really curious, and I know everybody watching is, why are they looking at my credit? That's what I don't understand.
It's not a hard credit hit; it's a soft credit hit. So,
wait a minute. What's the difference between
it doesn't
hard
show
credit?
up. It does not show up on your credit report.
It doesn't.
No, it does not. And it's really a financial responsibility type of look. If you tend to pay your bills or have a good score, then you're probably a good driver as well. That kind of a
Now,
thing.
is it like one of these scores? I don't know, Equifax or somebody like that. Is there like a line you've seen like, below 650, it's a problem?
It doesn't give a number score.
It doesn't?
No, it gives a letter score.
It gives a letter score. Is it like going to school? A is
exactly
good, and I'm assuming
Correct.
F is not going to happen.
Right.
In your experience over a decade of doing this, how many people have you seen get declined on that issue alone?
Very few.
Okay, so people usually have enough credit to
Right.
get it, even if it's a low credit
Right.
rating, they're still going to get it.
Right. They'll get a rate even if there's a no hit.
Okay.
It just won't be the best rate they can get.
Okay, so let me stop there. So if I have a credit rating, if it's a little lower, it's still going to pass. I may pay more for my insurance because of my financial instability.
Yes.
How many people know that?
I think a lot of people do. That's why they don't like to give out their. Nowadays, you don't even need the social. They do it all by your address and your birthday. So it's kind of scary.
Wow, so they really know your information and know what's going on. So this is, if you're ever looking for another good reason to keep your credit up to snuff. I mean, I can't even buy car insurance without this. I mean, wow. I mean, so I kind of get that now that you've explained it. And the second one, of course, your driving record. I get that. When you're looking at it, I'm going to exclude for a moment DUI. I totally get that.
Right.
You can't have insure a guy who's constantly getting pulled over, sent to jail, blah, blah, blah. How long, though? Let's say I've been a bad boy. How long before that drops off my record and it doesn't matter? Because, some people find God. Some people decide to change their habits. I'm just saying people change.
Right.
How far back do I have to go to look for that?
Most companies are 5 years.
So 5 years. So if you've been a bad boy,
It'll stay on your record
you're
for 5
going to be
years.
60 months in credit jail.
Now every year it won't be as hard as the previous. You'll get.
You're getting a little credit for every year you stand away.
Right.
Okay. Now, outside DUI, then, what about normal? In our state, we have the you have your first ticket, right? I got mine first time. I got a ticket this 2016 in 2016, first time in 12 years. Right?
Wow.
And so I was like bummed, right? It wrecked my good record. I just went and took a class. I didn't have to report it. My company was fine with me. No big deal.
Right.
Is that, most states have that option?
They do, but what people do not realize that if they pay the ticket and then do defensive driving, it's still on your record. If you go to court and ask for defensive driving and take it, it does not show on your record.
So if you would have went out there without going to court, and you paid for the course, took the course, and paid the ticket,
it would still be on your record.
Well, ladies and gentlemen, I just feel like I got scammed. Okay. Well, I'm not very happy about that. Okay, now, I've also noticed in auto, are there combination issues for auto? Like I have one car, now I have two cars, I have three cars. You could have things like that.
Multi-car, yeah.
Okay, you have multi-car. So that can drive some of these prices down. Let's talk about minimum issues for car and house, just minimum, just basics. Every state different? In other words, minimum?
The minimums are different.
So
for like the liability part of it on auto, we're 30,000, 60,000, 25
in Texas.
In Texas.
Right. So in every state it could be different, right?
It could be. We used to be 25, 50, 25, and they upped it.
So they upped it. Okay. Have you seen over the last 10 years, have they been upping it a little bit more? Is it because of inflation? Is it because people are getting in more accidents or driving? Have you seen it or been pretty
No,
steady?
it's been pretty steady.
So really, if I heard you right, the pricing of property casualty has pretty much been flat. Is that what I'm hearing you say?
The pricing?
Yeah.
I thought you meant the liability limit.
Oh no, I'm sorry,
issue.
liability. But because of the liability limit going up, have premiums been going up pretty steadily?
Premiums have been going up. They all generally do a rate increase, maybe once a year.
Okay, and
sometimes they'll skip a year.
Is it hefty?
It can be. It depends on how many claims have been. If it's a nationwide company, and we've had a lot of big catastrophes, flooding, which a lot of cars got flooded in Texas back in April and May, and that's going to go not just for people in our area. They distribute it, all over, so it doesn't hit one particular area so hard.
So everybody, even though I might not be living in your flood area, I
Right.
might be participating in
Correct.
helping the pricing in the overall scheme of things.
Exactly.
Okay, well, I'm not too happy about that. So I guess I can't do anything about it. When I'm looking at minimums, so every state has to, we got to find out what that is.
Right.
And is that going to be enough? So when I'm thinking people that look at minimums are just trying to get the price out of the way, right?
Exactly.
Now, for example, if a house has a mortgage, does the mortgage dictate the minimum? And is it going to be greater than the state? I mean, is that kind of where we're going?
The mortgage does dictate the minimum.
Okay, so it
they
could
usually want to be
could be
exact
greater.
what the loan value is, and sometimes the loan value includes the land. And insurance companies, you're not rated on the land; you're only rated on the dwelling. So we have to push back and say, look, the land is this much, and the house is this. They don't need that much on the policy. Like a $650,000 house, and the land is $200,000. The house replacement is really $400,000, so they don't need the $250,000 or $650,000.
So some carriers, if I heard you just correctly, some carriers include the land, even though what are you going to do? Burn the land down? It's pretty hard to do that.
We never include the land.
Okay. And remember back in 2008 when just before the market crash, the housing crash, the market was going up every year. And
Right.
man, I kept going back to my property casualty agent. Hey, do I need to keep pace? Well, yes, you do. And I'd have to pay a little bit more because my values were going up. Then when it went down, right, I noticed they did a huge reconfiguration of pricing. And I started noticing it went flat at first and then it kept going down because the market went down. So I've noticed that depending upon the nationwide homeowners value, right? There's going to be differences of opinion depending upon who's pricing this house out.
Well, and you have to remember also that the replacement cost is not market value; it's what it is for it to be build it.
Wow.
And that's a lot of people get confused on that. Well, I can't get that much for my house.
So there's a difference there. So the market value, which is sell for in real estate, may not be the reconstruction cost.
Exactly.
And have you seen the spread? Is it big between market value and I'm going to repair or completely replace a house if it burns down to the ground?
Well, the market value, this has been raising. Houses are going like hotcakes, or were in Texas. So the replacement cost factor is usually around 100. The average is usually around $100 a square foot. That's how we replacement,
not value, not market value.
Exactly, replacement cost.
And when you give that choice to your clients, what do they usually do?
Well, some people want the lowest minimum they can actually get.
So it's not going to include the land.
No.
It's not going to include the replace cost. It's only going to be the market cost.
Yeah, we have to really explain that. They get confused on the market. Thinking what they could sell the home for versus what they could insure it for.
And again, if they have a mortgage, the bank's going to be involved in some of this call, right? They're going to have minimum thresholds that they are going to impose. And I've noticed that, I have my car paid off. I do. I have my cars paid off. I have my house paid off. Do people ever not insure their home because they don't have any mortgage obligations? They own their house. Don't they still buy home insurance?
They do, but some people, once their house is paid off, they self-insure. So that's, it's on them if something happens to their home. Not realizing that could be a huge financial burden for them.
So you got people that are actually saying, I'd rather pocket the grand or whatever the cost is rather than put it on because my house is paid free and clear.
Right. And we try to really, what's the word?
You try to recommend something differently.
Exactly.
Yeah. Well, I find that I'd love to hear a recording of your conversation with one of your clients. That must be really enlightening. It's hard for me to understand a policy as a consumer. Does anybody do a summary statement or kind of an executive statement just so I can see a basic redux summary of what my policy says?
you talking about like the declaration page?
Yeah.
Yeah, they all have a
And it's
declaration.
pretty easy to read.
Pretty easy. Shows the value of the home.
I don't need to be an attorney.
Nope. What your deductibles are, what kind of form it's on, what it's covering, what perils it covers, and things like that.
Listen, don't forget to watch part 3 of our series on insurance protection and defensive planning, shopping homeowners and renters insurance. And keep in mind, before moving forward with any ideas on our show, always check with your tax consultant, legal counsel, or financial advisor. You've been watching Steve Savant's Money, the name of the game.